Afternoon, everybody. Just bear with us a minute as we let other people into the meeting, and then we'll get started. We'll just give it another minute, then we'll get started. Just a few more people joining. Okay. Good afternoon, everybody, and welcome. Thank you for joining us here this afternoon. So my name's Gavin Williamson. I'll be the host for today's session, and I'll be joined by the team from Beeks. So today we're going to be looking at how capital markets organizations can assess whether their trading infrastructure is fit for purpose. We're going to start with some introductions. I'm Gavin Williamson. I'm the CEO of the Broker Club, which is a community of regulated firms. Previously, I spent 25 years running electronic trading businesses at Citibank, Deutsche Bank, and HSBC. And the last 5 years at HSBC, I was the global COO for their equity business. And over the years, I've seen many changes, obviously. But one thing that's been consistent is reliability. Now, I'm going to hand you over to the big team to introduce themselves.
Thanks, Gavin. And hi, everyone. My name is Martina Stepien. My background is in sales and marketing, and currently I am a strategic account director at Beeks. I cover mostly the EMEA region and kind of working closely with banks, with hedge funds, brokers. I would say helping my clients adopt the most suitable strategy for their infrastructure needs, and supporting them throughout the entire process. I have been with Beeks for 8 years now, just over 8 years. And yeah, it's been a great journey. I'm happy to be here.
Thank you.
Hi, I'm Rich McMahon. I'm CTO at Beeks Financial Cloud. Throughout my career, I've specialised in building scalable mission-critical infrastructure platforms, supporting everything from enterprise services to financial trading environments, where performance, resilience, and security are key. At Beeks, and I've only been here 9 months, I lead up our global technology strategy and ensure that we are continuing to innovate and that we deliver reliable and high-performance infrastructure to our customers.
And hi everyone, I'm Oscar Neal. I'm the CISO at Beeks. I've been with the business just over 3 years. I look after all of security operations, engineering, risk and compliance globally. I've worked in technology and security for the last 14 years across various sectors like retail, cloud infrastructure, and critical national infrastructure.
Excellent. Thanks very much, everybody. So a little bit of housekeeping before we get started. We're going to run for about 45 minutes. We'll take obviously questions at the end. Where possible, we'd like to make it interactive. So if you've got any questions as the team go through their answers, then please feel free to put them out there. We've asked for no recordings. There will be a Beeks recording that gets distributed out to everybody. And finally, this topic will be expanded at the Broker Club annual conference on the 7th of May. So myself and Beeks will be going into a bit more detail live there. So anyone who's on the call who wants to join, feel free to join. Right, let's get started. So the first question is, what do you think has changed most in trading infrastructure requirements over the past few years?
I think, Gavin, the biggest change has been the kind of need to scale performance and not just deliver speed. So previously, we would have seen trading infrastructure designed for the lowest possible latency. And speaking with my clients today, of course, that latency aspect is still very important. It's still a crucial element of of trading infrastructure, but I can definitely identify the shift towards maintaining consistent performance as volumes and strategies scale. And volumes don't just increase; they actually are becoming more volatile, which is further driving that shift towards consistent performance. You're on mute, Gavin.
Thanks very much, Richard.
So I think CTOs and businesses are not escaping automation just now. That's something that is being pushed, whether it's automation via traditional means or via AI agents. Everyone has basically been asked to do more with less, and it's a priority across every industry. Automation in the trading infrastructure, it's all about removing those manual processes so that it's easier to scale performance and resilience, and everything gets maintained as markets and volatility changes and increases. Another big factor driving the focus on maintaining consistent performance is resilience. Downtime now is a greater financial and reputational impact, and resilience is expected by default. Market infrastructure must continuously evolve, really, to include redundancy, monitoring, and failover, and as well as automation built into the platforms.
Yeah, absolutely. I have definitely found that resilience and reliability is a key topic in my conversations with clients.
Yeah, I think from a security point of view, we do see that quite a lot as well. And I think the biggest changes have been driven from regulation. So within the last couple of years, with the NIS2 expansion in Europe and the Digital Operational Resilience Act, or the DORA Act, has kind of brought in resilient capability requirements for financial services, just to ensure that their infrastructure is fully DR capable and that it's tested as well. That's a really important point, so that in the event of any form of outage or disruption, that there's no service interruptions through that period.
Thank you. I mean, that's really interesting that that's part of the puzzle is driven by regulation. So yeah, I mean, certainly when I was running the business at HSBC, of course, we wanted performance and scale, but reliability was key because within that context, any outage massively damaged the brand and potentially the share price, and the financial consequences of that were very high. So yeah, I totally agree with you. So when we talk about trading infrastructure, what questions should I be asking when thinking about whether trading infrastructure is fit for purpose?
I would say there are actually two questions I ask when I start a conversation with a new client. So the first one is, can your infrastructure scale quickly during periods of market volatility? And I think that, you know, to actually say yes, to confidently say yes, you typically need to be exchange or financial venue adjacent. You'd have to have scalable infrastructure. I think kind of automated or rapid provisioning. And of course, with a minimal operational intervention. So just to elaborate on these points, you know, when you place your infrastructure close to exchanges or liquidity providers, network paths remain short and predictable. So it reduces that latency variance even when volumes spike. And then, you know, to kind of for scalability, right? Scalability also requires that automated kind of rapid provisioning of compute or storage without, you know, a hugely manual intervention. And then also if with orchestration and pre-configured capacity, firms can actually scale in minutes rather than days or weeks. So that preserves performance and resilience even, you know, when the market is under extreme stress. And then I guess, so the second question, and I would say even more important one, is whether you keep your infrastructure up to date, right? Do you have a team that monitors vulnerabilities at all time? And then, you know, do you have resources to actually act on it quick? I think that's the important question. Can you properly manage your infrastructure? And that includes security patches, hardware refreshes. I think that kind of aspect of that management aspect is often underestimated. You know, this is where we come in and we remove much of that operational and management overhead.
Yeah, I think that's right, Martina. You know, there's a lot of manual intervention required to keep systems running. The markets move and change quickly, and platforms need to scale and adjust to match that. Infrastructure needs to be able to react to those demands and adjust accordingly. Platforms that require everything to be done manually, you know, as everyone knows, distract your teams from focusing on the business tasks, and often can take, you know, considerable amounts of time.
Yeah, exactly. And you know, if your teams are manually intervening just to stay operational, that means that, you know, our proximity cloud solution replaces that firefighting with a stable automated operating model, right? Like 24/7 monitoring, defined run books, reduce the need for, you know, the reactive firefighting, right? And most importantly, many issues are addressed before they even impact trading.
Yeah, exactly. I think just building on what Martina and Richard have said, and Gavin as well, I think security is a key element of this. So when firms are considering these types of solutions, you need to be asking, like, is the infrastructure specifically designed for low latency trading and adapted from traditional models? So I think what Gavin said was, you know, you needed to balance security and availability. It's always the big challenge, but what we build into our solutions is we build in performance, but then not compromising on security.
No, I totally agree. I mean, the next question really touches on legacy as well. So, which clearly a lot of firms have, right? So the cost and legacy technology is a challenge, right? It's a challenge for many firms operating across the capital markets. Are you seeing any trends within the client base that of how they might cope or adapt to this?
I think when you run your own trading infrastructure, or to be honest, any infrastructure, capex spending tends to come in big, heavy blocks every 3 to 5 years when you're planning your refresh cycles, or maybe even faster as technology moves and changes. The teams then spend time designing upgrades, ordering hardware, replacing servers, switches, managing warranties and support contracts, ensuring they're all running the latest software, that there's no security gaps. And every time a new project hits, it all starts again. And teams that are already stretched are pulled into months of planning and design, and then all the costs arrive in one giant block on the CFO's desk. What we're seeing now is that firms are moving away from the sort of do-it-yourself models. Instead of owning and refreshing everything themselves, they want to be a more sort of cloud-friendly approach. People are used to dealing with Azure and other bits of the businesses, and moving to something that's pre-designed to deliver the performance they need on an OpEx-based, sales model. Proximity Cloud kind of fits within that life cycle. You don't really need to worry about life cycle management, hardware updates, keeping things up to date. That's all something the team at Beeks take care of. Your teams get to focus on the bit that generates your revenue, the applications, the trading strategies, while the infrastructure underneath just runs. It removes the blocky nature of CapEx and replaces it with a flexible, predictable operating model that scales with you over time.
Yeah, exactly. Because it's not only the direct cost of the refresh, right? It takes a lot of planning around the upgrades. So switching to an OpEx model means that hardware refreshes and life cycle management are handled by the provider. And your IT teams can focus on growth plans, strategic initiatives instead of boring logistics. So I think, in general, that proactive management of hardware life cycle, whether it's end of life, end of support timelines, it reduces operational risk. So the risk of outages, unsupported platforms, and, say, emergency replacements during refresh cycles.
No, I mean, I totally agree with both of you. I mean, capital expenditure is a complex issue for many firms, and by default, therefore, it kind of just gets deferred, which just ultimately makes the problem even worse when you actually do have to address it. Which is why many firms do prefer the pay-as-you-go. Certainly, when I was signing co-location agreements, one of the main motivations behind that was towards a flexible operating model, pay-as-you-go. And to have a clarity as well on delivery timescales. So yeah, no, it's a very valid point you make.
Yeah, and I think from a security perspective, it goes without saying that running legacy infrastructure introduces not only security risk but resilience risk as well. I mean, we ensure that we take that heavy lifting away from clients, so we maintain all that end to end, ensure that patches are applied, the kit is maintained and monitored. That's the difference. We do this for a lot of clients currently. We've had a recent example working with a tier 1 bank who ran a very old unsupported platform. We took their design, refreshed it, so they were able to run on a smaller footprint of infrastructure, but then we were able to upgrade it, run it on up-to-date software and hardware, and it just improved their overall performance and security whilst not having to invest heavily in CapEx.
Yeah, I agree. Thanks for that. So I'll just pause there. There is a question that's come in. So what impact is there to clients in the event of an outage when failing over to a disaster recovery site? Not sure who wants to take that one.
I can talk about that. So it really depends on how the client's set up and configured. But from a trading point of view, you have two independent sites. A failure in the single site doesn't affect your DR platform. you do need to have multiple trading connections to each platform, and there will be a drop because it's not completely synchronized between sites. So that would be down to the client as to how their application synchronizes between systems. But from a hardware and availability point of view of the platforms, both platforms are ready to go, and from our point of view, available at all times. It's really how the trading data would move at the application level.
Good. Thank you, Richard. Fine. So let's move on to the next question. Now, we can't really talk about trading infrastructure without discussing latency. It does become a bit of an obsession for some people. But how can trading infrastructure support consistent low latency as volumes grow, and obviously volatility hits that question as well?
Yeah, I mean, I think we place our infrastructure as close as possible to the trading venues. Reduces the overall network distance and jitter. It keeps things predictable as message rates increases. If the latency suddenly increases or varies, orders will arrive later than intended. This can lead to missed opportunities. So low latency at scale comes from an infrastructure designed to absorb bursts and traffic, and to have the capacity built in throughout the platform, not just for day-to-day running, but for the unexpected burst volumes that sometimes trading can see.
Yeah, totally. Richard is right. Placing your infrastructure in a strategic location close to financial venues is a key. But also from a hardware perspective, consistent low latency is achieved by actually removing bottlenecks and keeping performance predictable. So things like low latency network components, high performance compute, accurate time stamping using PTP, multicast, right, are all essential elements of latency sensitive deployments. And to add to it, network analytics of course, with a microsecond level visibility, ties all of these components together by kind of continuously validating that they are behaving as they should, right, as they are designed. So detecting any congestion and variability early, and ensuring latency remains stable as volumes grow.
I know exactly that. So I mean, one of the constant conversations over the last 25 years has been around latency, obviously. How best to achieve it, and to the point you just made, Martina, is how to measure it as well, and how to make sure that you are staying within where you want to be. And firms that kind of I've seen over the years who get this right and able to replicate it and scale it, they're definitely the ones that win over the medium to long term. Now, the other thing I've kind of noticed, and you've touched on it as well, is technology has definitely become more complex, and therefore back in the day you kind of focus on one, maybe two touch points within your architecture, but the impression I get now is that you've really got to look to end before determining the whole latency, where the bottlenecks might occur. So that's what I've seen. I just will pause again and have a question there. So, which kind of plays into exactly what we've just been talking about. So where do you see the biggest sources of latency variance today? Is that network, compute, operational processes, etc.? And how do you know? How do you know they are the places that you should focus?
So I guess it could be, any element of network compute. The idea is to have visibility into your infrastructure, right? So the way we do it, we provide network analytics that can, detect or identify issues before they occur. So there are, of course, early signs of congestion or bottlenecks that you can identify with the right software, essentially. So you do have to have that end-to-end solution to be able to identify those problems. But
Thank you.
again, it could be anywhere. It could be your infrastructure, your network, your connectivity. Yeah.
Right. We have one more question that's come in as well. What has been the biggest change / improvement in tech infrastructure in the last few years? ? And then cloud-based tech ... So that's kind of hinting at that one. Who's going to take that one?
I can take that as well. So I guess the biggest improvement, the biggest improvement lies in kind of aspects of hardware, of course, but I think also, the AI function, or kind of the AI capability helps as well. So, we are trying to kind of develop and improve our analytics using AI, being able to identify or, kind of filter some of the issues or kind of problems you might face. So I'd say the biggest improvement we can notice in the past, not even 5 years, but maybe 2 years, lies within that kind of software analytics and AI function.
Interesting. Very interesting. Thank you. Okay, so moving on to the next question. So we're heading towards the sort of final part of the discussion. So accelerating time to market for new strategies and venues, what I would call time to revenue in effect. How can trading infrastructures support this in a positive way?
So I think that's, the kind of pre-built exchange adjacent, as I said before, environments remove procurement delays, right? So your traditional colo deployments depend on very much on ordering, installing, validating hardware, and it can add a really long time to before a strategy or venue goes live. We're actually talking months, sometimes even a year, right?
Yes,
so I think
absolutely.
exactly. So I think a strong trading infrastructure speeds up time to market by making it a lot easier to, test, tweak, and launch that new strategy quickly. So, and also, with that real-time monitoring and flexible connections to different venues, you can roll out and expand strategies without any delays. So.
Okay,
Yep.
Thank you. Richard?
Yeah, when you're launching, new strategies, especially the early stages, can often mean constant tweaks and changes and choices and hardware and infrastructure. If if your infrastructure can't scale fast enough, then it slows everything down. Delays getting everything into production. What you really need is a bit of an elastic capacity so that you can iterate quickly and grow and redesign, without redesigning the whole platform. In competitive markets, speed isn't just about execution; it's also about getting ideas live before others do. Firms that can launch faster and get to test more, enter new markets earlier, and can adapt sooner. That's where the right infrastructure, that's designed for the task, makes a real difference.
That's a really good point. Yeah, I agreed.
Yeah, and I think just building on that from a security perspective, like the bespoke security designs can slow the time to market. I think all of us will appreciate when you be proposing new security infrastructures, new infrastructures to security teams. Internally, you can come up against a lot of challenges there. And I think that's where we come in with our standardized approach. So we have standardized approach to how we build infrastructure from end to end. So an example of this is where we'll build specific operating system templates, whether that's virtualized or on bare metal, that's specifically focused on reducing latency or obtaining the best performance we can out of that infrastructure, but then also ensuring that it's secured by default. And as clients' infrastructures grow, this is what Richard said about being elastic. You can, you be comfortable that the security goes with it, and you have that assurance.
Excellent. Thank you very much. Again, pause to take a question. Thanks everybody for posting these questions out there. It makes the session much more interactive for us. Thank you. Now this could be an interesting one for someone to pick up. Okay. From a connectivity perspective, resilience becomes a real challenge. How do you manage the ongoing challenges around submarine cable outages, primarily in the APAC region?
Well, at the moment we have multiple submarine providers running from Singapore back into sort of Paris areas. Unfortunately, a lot of them go through similar pinch points. And like everyone else, our other route is via the United States and back, which isn't necessarily a latency sensitive route, but at least the traffic is up. We are looking at deploying additional paths and routes potentially via South Africa for the APAC region. But again, it is the same answer as everyone. As long as you have capacity on different cables, then hopefully you can weather the storm of outages. It is an ongoing issue. It would also be fair to say that some of the land routes are not currently available as they run through Russia. Yes. So it is definitely a challenge. Okay,
that's a good point. But I mean, so the latency may drop off, but the resilience can be maintained, I guess.
Yes, correct.
Yeah. Okay. Thank you. That was interesting. So we talked around some of the key points on assessing whether your trading infrastructure is fit for purpose. We've taken a number of questions around that. Before I open up to the whole floor, have you got any sort of closing remarks, closing points you'd like to make, Tim?
So yeah, Gavin, just kind of as a summary of what we covered today, I think that in today's markets, trading infrastructure is not just about latency, right? So that was one of the kind of main points we made here. It's also about reliability, scalability, resilience across the entire system. So I think that firms that invest in kind of automated exchange or financial venue adjacent and well-managed infrastructure can launch strategies a lot faster, adapt to market changes a lot quicker, and in general just operate with more confidence, right? So ultimately the right infrastructure turns that complexity into opportunity. And it gives firms the agility to stay ahead in a competitive environment, right? This is where I see our clients or see clients win. And I think that all these capabilities together define what it means to be fit for purpose in modern markets.
Thank you. Richard, anything to add?
I mean, I think we've covered an awful lot of ground. I think it's fair to say that through Proximity Cloud, we do a lot of the heavy design lifting. When vendors bring new products to market, we evaluate that for all our clients, and then we choose to either embed it into our product, or it becomes the next natural upgrade and transition. It's an ever-changing landscape within the market, and trying to ensure that our customers get the best bang for their buck and optimal performance is key for us.
Yeah, good point.
Yeah, and I think overall the biggest challenge we see from a security perspective within our client base is the cloud adoption for financial infrastructure. It's just ensuring that we have these robust security controls in place. There's the recent cost of a data breach report came out last year, and whilst the year-on-year averages have been going down for things like detection time and containment time, I think it's important to have robust 24/7 detection and response capabilities to isolate, attacks and threats to customer environments, but also maintaining resilient infrastructure where possible. So we focus on adopting zero trust principles, whether that be attack surface management, robust network segmentation, conditional access, those sorts of things. So, I mean, in summary, there's no silver bullet when it comes to security. I think it's about having a robust security control framework focused around resilience.
Excellent. Thank you very much. Okay, so we've got a couple of questions that have been put in. The first one, I think, kind of lands back with you, Oscar. So how do you ensure security controls scale automatically as capacity and volumes increase?
Yeah, I think that comes back to the point I made earlier. Like, we've built our solutions to include security controls from the ground up. So from the configuration of the network down to the compute itself. So when a customer's looking to spin up new infrastructure, whether it's virtual machines or dedicated servers on bare metal, all the same security controls and assurance applies. So just like it would in public clouds, it scales with customer environments. And it's something that's consistently monitored by our operations teams and also assured with third parties through our ISO accreditations and SOC 2 reports that we're transparently sharing with clients.
Right, thank you very much. One more question that's come in. How do you support 24/7 global business across numerous locations, time zone, and connections?
So go ahead, Richard.
That's okay.
Yes.
I think we run a 24/7 support center. So like most businesses, we also have staff in our geographic regions. Certainly in our big trading locations, we have our own teams supplementing the Equinixes of this world. So it's key that we're responsive and we're online when our customers are. Although, as you might tell, we're Oscar and I both have Scottish accents.
You'd never tell. You'd never tell.
No.
Although Martina's not Scottish, she lives in
A
Scotland.
lot of accents in the team. Yeah.
But we are a Scottish business, but we have been supporting customers for a long time, 24/7 in almost every region in the planet.
Yeah, and also, we do have our own engineers in most of our locations, at least in the key kind of financial locations. So as Richard mentioned, we don't only rely on Equinix or Smart Hens. We actually have our own engineers, which which is beneficial on many different fronts. Not just it's a way to kind of make sure we keep our physical environments more secure, but also our own engineers are more knowledgeable about the infrastructure we have.
Excellent. Thank you very much. So one more question that's come in. Any more questions, please put them out there on the Q&A. So we've touched on sort of monitoring a little bit and things like that. So at what point would you typically realize your infrastructure is becoming constrained? Before or during periods of market stress? Was a question.
I can take this one, Gavin. So I think yes, definitely during during market stress, you will realize you have issues, right? But there are, of course, early signs. As I mentioned before, there are ways to kind of identify those early signs, and I guess you kind of do that through things like capacity planning or just monitoring, latency monitoring, or testing, right? So all that really is down to the customer to identify, but you do need a support of additional software.
Yeah,
or a provider.
I think for the proximity clouds that have our analytics products deployed, they do use machine learning to watch and understand trades. They extract the packet data and can watch and understand all the transactions that are going through the network. And the analytics is designed to learn what good traffic looks like and to predict where it sees certain behaviours start to change, when things might start to be a problem on the network, and generate alarms to the customer.
Thank you. So this is the kind of silver bullet question to a degree, right? But seriously, so what changes would deliver the biggest immediate impact? Better automation, simpler operations, more predictable performance. I mean, we've touched on all aspects of that already, but is there any one particular thing if you're going to give someone a magic wand?
I think
yeah.
I think it's difficult, Gavin. Depends who you talk to. Some people want, you know, maximum performance and might accept a little bit of, you know, disruption in the service because they're right on the top edge. But I think for most people, they want, you know, predictable platforms that, you know, scale as needed, and, you know, performance doesn't drop off a cliff unexpectedly.
Yep.
Yeah, exactly. And I
yeah,
think just to add to it, Gavin, sorry, you know, that I think that scalability aspect could also be applied to, you know, kind of the planning, delivery of the environment, right? So there are a lot of kind of macro issues that, you know, that organizations deal with, including some of the hardware kind of RAM or SSD issues, you know, kind of extended lead times, higher costs. So I think, you know, our clients do look for more, you know, easier kind of way to deliver their environment or to build their environment. We can do that because, you know, we stock hardware. We're ready to kind of deliver a full cabinet within weeks rather than months, even with the kind of current environment and disruptions in the market.
Okay. So another question's come in from outside. So how do you introduce a new functionality or changes? Is there a client consultation, testing, adoption, etc.?
We can offer POC as well. It's I guess it depends on the requirements. It's something that we approach on a case by case basis, but you know, we do an certain kind of for certain requirements we do offer POC as well.
Okay. Any more questions out there while I just sum up, and then we can see if anything come in while I do that, and then we'll close up. So so just in my summary, really, we've talked about consistent performance matters more than raw speed. Scalability and resilience are now baseline requirements. Manual intervention does not scale. Firms are moving from a CapEx to a flexible operating model, maybe have already moved. And time to market, time to revenue, as I call it, is definitely a competitive advantage. So they're the key sort of points we've touched on. If there's no more questions coming in, let me just check. Then all I'm left to say is thank you all very much for attending. Thank you very much to the Beeks team for their wonderful insight and sharing the knowledge of their various skill sets and where they sit. If you've got any other follow-up questions, they'll come. Please reach out to the team, and they will be able to answer those. There will be a recording of the session, like I said at the beginning, which we can share with you. And then finally, we will all be at the 7th of May conference in London, America Square, covering this topic and more. So please register, come on down, and I'd love to see you all there. That's all I had today. Thank you all very much, and we'll see you all soon. Thank you very much.
Thank you.
Thank you.